dividend. Right? So listen, declaration and payment of dividend, section 123. Every company shall pay the dividend in cash, not in kind. Every company shall pay the dividend to a registered shareholder, not to the any other person. Okay, sir. And also every company shall pay the dividend to the registered shareholder or his order. Some companies are prohibited to issue the dividend. What are those companies? Defaulting in the provisions of section 73 and 74. What is section 73 and 74? Defaulting in the provisions of repayment of deposits and interest thereof. Repayment of deposits to members, repayment of deposit to means public, and interest thereon their failure, then those companies are ineligible to issue the dividend. So here, dividend generally issued at the annual general meeting by a shareholder. Generally, first of all, board of directors can recommend, then shareholders can accept the recommendations given by the board of directors. Shareholders wanted to decrease the recommendations given by the board of directors. Board of directors said that 10% or 20%, like that, they can give a recommendations to the shareholders. Shareholders, they wanted to reduce the recommendations given by the board of directors, but they cannot increase the recommendations given by board of directors. Clear. So generally, dividend is declaration of dividend is nothing but ordinary activity that can be conducted, that can be made at annual general meeting. Suppose, sir, dividend can be declared at AGM, but between two AGMs, meanwhile dividend is declared by any company. Such a dividend is called as interim dividend. Dividend includes such dividend is called as interim dividend. Dividend includes interim dividend also. This is the definition given under section 231 of the Companies Act. What is the dividend, sir? Dividend includes interim dividend also. What is interim dividend, sir? Dividend is declared between two AGMs. So board of directors declared between two AGMs if company has incurred any loss up to current year, up to end of quarter also, immediately preceding date of declaration of dividend. So no problem, sir. Company even continuous losses, even though company can declare a dividend, or up to current quarter, 3 months, 3 quarters, company can losses. A fourth quarter, company wanted to declare the dividend at any point of situation. Company has a declared dividend, but whenever in case of losses, company wanted to give the dividend, then company has to follow some conditions. What are the conditions company has to follow? Okay, sir. The average, sir, the rate of dividend is not exceeding average rate of dividend in the past 3 years. The rate of dividend is not exceeding average rate of dividend in the past 3 years. Such a rate only you can issue. More than that rate, you cannot issue. And also, sir, once a dividend is declared, it is a liability of a company. Sir. They are not having any right to withdraw it. Then once the dividend is declared, then there is nothing but obligation of a company. Company has to pay. Okay, sir. Yes, sir. Whenever company incurring the losses, sir, company earn the profit, no problem, sir. Company can issue the dividend, whatever maybe the company wanted to issue. But company incur the losses, so at that point of situation, company wanted to give the dividend. Company wanted to give the dividend, so during those situations, company has to follow some conditions. What are those conditions company has to follow? Sir, I will disclose it. What are the conditions company has to follow, sir? Listen. What are the what are the conditions? Sir, average rate of dividend not exceeding 3 years, preceding 3 years, and a rate of dividend, sir. Listen, I will disclose the conditions. Right, sir. Listen. What are the conditions? Listen, last point. The company has incurred loss during the current financial year up to the end of quarter immediately. Sorry, end of the quarter immediately. Interim dividend shall not be declared at the rate higher than the average dividend declared by a company during the immediate preceding 3 financial years. For example, a company declared a dividend at rate of 16% during the immediate preceding 3 financial year. That in case a company incurred the losses, the current financial year, the permitted to declare into dividend rate not exceeding 16%. Okay, sir. And also, sir. Wait. The dividend rate. These are the three conditions, sir. First condition, rate of dividend not more than 3 years average rate. First condition, this is the first condition. Okay, sir. Second condition, second condition. So the total amount to be drawn from the accumulated profits. Sir, listen. What are the sources of dividend? Generally, what is the sources of dividend? Dividend can be paid out of profits. Either current year profits. Okay, sir, wait. Dividend can be declared out of either current year profits. You can paid out of current year profits or either previous year profits or both, sir, both. Previous year profits is nothing but reserves. Dividend can be declared out of current year profits, previous year profits, or both also. So whenever current year profits are not sufficient to declare the dividend, then at that point of situation, company can issue the dividend. Okay, so no problem. But company has to follow some conditions. The current year profits are not sufficient to declare the dividend, then at that point of situation, company has to follow some conditions. What are those conditions, sir? First condition, the rate not exceeding previous 3 years rate. Second condition, sir, amount withdrawn from the reserve. We can withdraw amount withdrawn from the reserve, but not exceeding, sir, amount withdrawn from the reserves. That reserve amount, sir, you can suppose 10 crores are there in the reserve. No, the amount withdrawn from the reserve not exceeding 10%, not exceeding 10%. So not exceeding 10%, not exceeding not exceeding 10% of paid up share capital, paid up share capital and free reserves, paid up share capital and free reserves. Examination practical questions may be in this problem, sir. Company incur the losses compulsory this time, incur the losses, sir. Even though company can issue the dividend, yes, dividend generally issued out of current year profits and previous year profits are both. But at that point of situation, company wanted to brought from the reserves how much amount they can be brought. The amount is not more than 10% of paid up share capital and free reserves. In case of company paid up share capital is there, free reserves is there. Now, how we should calculate paid up share capital for suppose 10 crore rupees, free reserves 5 crore rupees, 10 plus 5, how much amount? 15 crore rupees. What is a 10% on 15 crore rupees? 15 lakhs. Maximum amount company can declare dividend, how much amount? 15 lakhs only. Okay, sir. Okay. Next, sir. Next. Sir, here, third condition, sir. Third condition. What is third condition? Sir, you can withdraw from the reserve. How much amount? 10%. Withdrawn from the reserve. Sir, after withdrawal. So listen, after withdrawal, the amount, sir, the amount. After withdrawal, the amount is, the amount. So the amount is not less than 15% of paid up share capital. 15% of the, suppose simple examples, say one example, you do the question, practical question. I will display a question, then you can do the particular question. Listen, sir. You will do the question. Practical question. Wait. Wait, sir. I will display the question. Wait, they will display. Right, they will display. 1 minute. Onwards. This is the example question, sir. I say, students, Shilpa Sugars Limited has been regularly declaring dividend at a rate of 20% on its equity shares for the past 3 years. However, the company has not made adequate profits during the current year ending on 31st March 2019, but it has got adequate free reserves which can be utilized for the maintaining the rate of dividend 20%. Advise the company as how it should proceed in the matter. It wants to declare dividend at the rate of 20% in the year of 2018-19. So listen. So what is this question? So listen. The company is there. The company is there. Company is having a paid up share capital of 10 crore rupees. Free reserves of 2 crore rupees. So current year there is no profit. No profit. So previous year reserves are there, no reserves 2 crores are there. Okay. So now company wanted to declare a dividend. So current year profits, there is no profits, or current year profits are insufficient to declare a dividend, then company has to follow. The company has to follow some conditions, no? Company has to follow some conditions. So listen. So in this scenario, sir, how much amount a company can declare? How much amount? This is the question. So first condition, sir. First condition, so last 3 years average. Suppose company, sir, last 3 years average they can give 12%. Average they can give 12%. Okay, sir. Sir, average they can give 20%. Say example, 20% on paid up share capital. So what is the 10 crores and 10 crores to 20%? How much amount? 2 crores now? 2 crores, 10 crores to 20%, sir. 10 crores into 20 by 100. Then how much amount? 2 crores amount is the average dividend given in the last 3 years. Now this year company is not having profits, then company wanted to issue the dividend. How many reserves are there? Sir, 2 crores is the reserves are there. Then you can distribute entire 2 crores? No, sir. You have to follow three conditions. First condition, first condition, average rate of 3 years, 20%. Second condition, how much amount you can withdraw, sir? Only dividend rate 15% of paid up share capital and free reserves. That amount, that much amount only you can withdraw from the reserve. So no, 10%. So 10% of paid up share capital and free reserves. How much amount? 10 plus 2, no, 12. Out of 12, out of 12 crores. What is that 10%? 1.2 crore. 1.2 crore. Okay, sir, 1.2 crores. So third condition, sir. Sir, after withdrawal, 15% of paid up share capital amount left in reserves. Paid up share capital, how much amount, sir? 10 crores. 10 crores, 15%, how much amount? 10 crores, 15%. 1.5 crore amount we can be withdrawn. That much amount should be maintained reserve. And a 2 crore reserves are there. Compulsory should maintain at 1.5 crore. How much amounts are remaining? 50 lakhs amount only. Again, sir, you are eligible to declare how much amount? 50 lakhs amount of dividend only, not that limit. Not remaining amount. So 20% of paid up share capital, how much amount? 2 crore rupees or 1.2 crore. Sir, 1.5 crore rupees balance you should maintain. How much amount is there remaining? 50 lakhs. Out of this, what is the less amount, sir? 50 lakhs rupees. Company is eligible to declare dividend only 15 lakhs. Company is simple, sir. Another simple, sir. Suppose one company is having 55 crore rupees paid up share capital and 3 crore rupees reserves. How much amount of dividend they can give? Last 3 years average 10%, sir. What is the 10% on paid up share capital? 10% average. And the 10% average and paid up share capital. 50 lakhs, 5 crores, so 10% is nothing but 50 lakhs. First condition. Second condition, maximum withdrawal amount 10% of paid up share capital and free reserves. What is the paid up share capital? 5 plus 3. How much amount? 8 crores, 10%, 80 lakhs. So after withdrawal, you should maintain how much amount? At least you should maintain 15% amount. What is the 15% amount? 15% on 3 crores, how much amount, sir? 45 lakhs you should maintain. Then the maximum amount, how much amount? 80 lakhs you can give the dividend. 80 lakhs amount you can eligible up to give. Why? Because, sir, you should follow three conditions. Are a maximum rate of dividend, the rate is not exceeding average of last 3 years. Second condition, you can withdraw from reserves. How much amount? Only 10% of paid up share capital and free reserves. So after 10% withdrawal, okay, sir, at least they can maintain 15% of paid up share capital in the reserve. Sorry, 15 75 lakhs, sir. 15% of paid up share capital in the reserve they should maintain. Adhe, sir, those are the three conditions you have to maintain. Practical question, compulsory in examination, sir. Compulsory in examination, they can ask practical question. So answer. First condition, average rate. Second condition, the total amount to be drawn from the accumulated profits shall not exceeding 10% of paid up share capital and free reserves. Okay, sir. So total amount can be done. Third condition, sir. Third condition. So answer. Third condition. The balance of reserves after such withdrawal, the balance of reserves, you can withdraw, sir, 10% you can withdraw from the reserve. After withdrawal, the balance of reserve not fall below 15% of its paid up share capital. 15% of paid up share capital, not less than that much amount. You should maintain more than that amount only. Out of that, you should calculate these all three conditions. You should pay the dividend reasonable amount. Other, sir, reasonable amount you should pay. Yes, so that is nothing but conditions. Clear? It is nothing but. Right. Right. Those are the three conditions you have to maintain. Those are the three conditions. The company is having sufficient profits, no problem. Company is not having sufficient profits, then only you should go through with these three conditions. Okay. There is nothing but section 123, payment of dividend and prohibition of declaration of dividend if failure to follow section 73, interim dividend. But you can, even though you are not having sufficient profits, you should give a dividend, either final dividend or interim dividend, but you should follow three conditions. Okay, sir. Next is the section 124. So there is nothing but unpaid dividend account. So here, date of declaration of dividend. Company declare a dividend. Date of declaration of dividend. Company declare the dividend. So within 5 days from the date of declaration, the company, that amount can be deposited in the separate bank account. So today companies declare the dividend within 5 days of from the declaration, company, that much amount can be deposited in the bank account. Okay, sir. Then within 30 days, sir, within 30 days, that is can be claimed by the shareholders or you can pay to the shareholders. Within 30 days, that is unclaimed or unpaid. Generally, you can declare a dividend, sir. Within 5 days, you can deposit in the account. Deposit it in the account. Then separate bank account. The people can accept the amount. People can claim them amount. Or you can pay to the people's bank account within 30 days. You are paid or people are unclaimed. Then within 7 days, transfer to the unpaid dividend account. You prepare the transfer the unpaid dividend account. If not transferred, then there is a 12% per annum interest you should liable to pay. Company is liable to pay 12% per annum interest on that particular amount. Okay, sir. Then they can transfer to the unpaid dividend account, transferred. So up to 90 days, sir. Again, 90 days also there is no response from the shareholders. There is no response from the shareholders. Then they can prepare a statement. Who are those shareholders? They cannot respond it. They cannot claim how much amount of dividend is there. Like that, they can prepare a statement. That statement can be published in the website also. Within 30 days. So within 90 days. So remaining 7 years. So after means 7 years also no one is not claimed. Once you can transfer to the unpaid dividend account, up to 7 years also no one is not claimed. Then that amount can be transferred to the nothing but transfer to the IEPF account. Can be transferred to IEPF, Investor Education Protection Fund account. So this is a process, sir. What is the process? Simple process, sir. What is the process? First of all, sir, what is the process here? Simple, listen. What is the process here? What is the process, sir? First of all, sir, company declare a dividend. Company declare the dividend. Company declare. So within 5 days. So within 5 days, sir, company can declare a dividend. Within 5 days, they can deposit it in the separate bank account. Separate bank account. Okay, so deposit in the separate bank account. So now whenever they can deposit in the separate bank account, within 30 days, they can paid or they can claim. They can paid or they can claim. So within 30 days, they cannot paid or they cannot claim. Then within 7 days, so within 7 days, that can be deposited in the unpaid dividend account. Unpaid dividend account. Unpaid dividend account, sir. So unpaid dividend account, you can transfer to the unpaid dividend account. Okay, sir, transferred. So up to 90 days also, no one cannot claim, no one cannot pay. They can prepare a statement. Who are be those people? They cannot claim how much amount, what are the address, everything. they can claim. Okay, so then they can file that information in the website of a company. These are the shareholders. We are already declared a dividend. Up to the 90 days, they can transfer to the unpaid. They cannot claim. So like that, they can publish in the website. So up to, sir, then within 7 years, sir, after transfer to the unpaid dividend, 7 years, no one is not claimed. Then you can transfer to the IEPF account. It's nothing but Investor Education Protection Fund account. You can transfer it. Investor Education Protection Fund account. Right, so there's nothing but IEPF account. Investor Education Protection Fund. That's an Investor Education Protection Fund account. Investor Education Protection Fund. So who will establish this fund, sir? Central government can establish the Investor Education Protection Fund. So whatever the funds are transferred, or whatever the funds are credited to Investor Protection Fund, account law, which amounts are credited. So students, the grants given, donations given by central government, amount to be unpaid dividend account. And previous year Companies Act, before Companies Act 2013, 1956 Companies Act also there. Under that also there is a IEPF account. What are the amount in that particular IEPF account can be transferred to current year 2013 Act Companies Act IEPF account. Amount in IEPF Fund 205C of the Companies Act 1956. Okay, sir. Whatever the investment, so whatever the amount is there now, this fund that can be invested in the other account, other securities, shares, investments. If any interest on that investment, that is also created, or any income, sale of those securities, you can sell the having securities. They can sell the securities. Any income you have received, everything can be transferred. Okay, so there is nothing but these are all funds are credited to IEPF account, Investor Education Protection Fund. You can transfer, you can maintain account, the all amounts can be credited to this fund. So you can, but these all amounts, what purpose you can utilize? The purpose of utilization of the fund. So what purpose you can utilize the fund? So refund unclaimed dividend deposit. So after 7 years, sir, after 7 years, any shareholder make an application to the central government. Sir, during these 7 years, we are not having ability. We are committed means we are defaulted, or that person shareholder is died. No, I am the nominee of my father, and I wanted to claim the dividend during 7 years. I don't know the information. Like that, during the after 7 years, any person claim the dividend, the reasons are sufficient, then they can pay the dividend. Or promotion of investor education and awareness. Investors, so many investors are there now, they can give a training sessions to the investors. So reimbursement of legal expenses, or in case of any class action suits, though they can file a case against particular, okay, central government according to so many activities, they can reimbursement of legal expenses. So why? Because central government can call the general meeting some part of situations, the any expenses are incurred, or some also some shareholders can call for the general meeting, any expenses are incurred, like the reimbursement of legal expenses. Legal expenses means any charges like that. Okay, sir, any other art given by the court. Okay, so any other thing. For these purposes, we can use the IEPF account. Sir, who are the IEPF account, and now who can manage the IEPF account? Who are the IEPF account? Is IEPF is nothing but protection. It's a board. Who can appoint? Central government can appoint. Who are be the people, sir? One chairperson, one CEO, maximum of 7 other members. One chairperson is there, one CEO is there, one maximum of 7 people are there in that particular IEPF. They can act as they can credit the amount, they can debit the amount, they can give directions to a company like that. So relevant records, accounts, documents must be maintained central government after a comptroller. Why? Because central government, sir. Central government is nothing but the audit can be done by whom, sir? Comptroller and Audit General. I already said an IEPF account, the fund related balances, the fund related inquiries, the fund related audit is done by Comptroller and Audit General. He can report it to the central government. Okay, sir. It's nothing but IEPF account. Next, sir, 120 section 126 is nothing but abeyance. What is abeyance? Listen. What is abeyance? So listen, company is there. Company issue the shares. Issue the shares. X is a shareholder. So there is a transfer of shares possible or not? Transfer of shares. X transfer the shares to Y. How the transfer is why the share certificate SH4 document were already discussed. The document submitted to a company verifies that such is a valid transfer or not, then company cancel the old share certificate of X and they can issue the new share certificate to Y, then Y become a shareholder. Like that, the shares are transferred from one person to another person in case of company. Okay, what happened here? What happens here, sir? So you can make an application to a company, but application is in pending. Pending. Shares are not yet transferred. The transfer is registered, but that is in pending. Meanwhile, company can issue the bonus shares. Meanwhile, company can issue the right shares. Or meanwhile, company can issue the dividend. Who will receive the dividend? X will receive the dividend or Y will receive the dividend. So the transactions are pending, some disputes are there, some the transfer is pending. Meanwhile, company can issue the dividend. Meanwhile, company can issue the shares, bonus shares or right shares. Who will receive the benefit? X will receive or Y will receive? Who will receive, sir? So in this scenario, there is a confusion. Then law clearly says that in this scenario, sir, up to the resolution, up to the solvation, means up to the completion of this problem, we can kept at company's control. That is nothing but dividends or shares are at abeyance. You can temporary stop. So after completion of after the problems are sought out, then they can release. This is nothing but abeyance. It is nothing but abeyance. Sure. Sure. Abeyance means temporary suspension to keep pending when transfer documents for shares is submitted to the company and such transfer is pending or it's under the process, then transfer the dividend to unpaid dividend account till the transfer is completed. Once the transfer is completed, then after that, that can be transferred the issue, bonus shares or right shares, and whatever may be the securities. After the dividend means after the transfer is completed, after the dispute is resolved, then you can transfer to the person. However, the above points are not applicable when the existing shareholders are authorized the company to transfer the dividend, bonus shares and right shares to the. Okay, sir. So if you not follow the provisions of 123, 124, 125, 126, the dividend is declared but not paid within 30 days. Dividend is declared, depends within 30 days we can pay. If we are not paid within 30 days, then what happened? Within 7 days, you can separate unpaid dividend account. After 90 days, after 7 years, IEPF account we are discussed now. If you are not pay the dividend within 30 days, so then company is liable for penalty. Company default, company mistake, company is liable to for 18% per annum simple interest. Director, imprisonment 2 years, fine up to 1,000 rupees per day of default. Nothing but section 127. But this section 127 is not applicable. I will display, sir. So listen. Sir, here company within 30 days they can give a dividend after declaration. If not, company is liable for penalty. Or director or officer in default is liable for penalty. But this 30 days delay, more than 30 days delay is happened because of law. Because of law. At that point of situation, no problem, sir. No need to pay penalty. But also, sir, the 30 days delay happened. Sir, here shareholder said that, sir, you will pay dividend through Paytm. Paytm. I required, sir, you will send my dividend amount through Paytm. Like that, shareholder give it directions. Give the directions. Then whatever the directions given by the shareholder, company can pay the dividend to the particular directions only. Company will pay through Paytm. But what happened is not possible. Why? Because the Paytm is possible, but Paytm given number given by the shareholder is wrong. That is the reason why company is not able to pay the dividend within 30 days. Actually, 30 days company is ready to pay, but whatever the phone number given by the shareholder, that is a wrong number. Then that is the reason why company is not able to pay. At that point of situations also, more than 30 days, your penalty is not attracted. But one condition. So if you are failure to transfer the dividend because of wrong number, no, that shall be communicated to shareholder. You should give a communication to the shareholder, then only you are not responsible. If not communicated, you are responsible. Like as per the law, as per it means 30 days are completed, more than that you are given directions, I'm not able to follow the directions because of some problems, you can give an intimation to the shareholder, then only company is not liable, otherwise company is liable, and it's some exception and the penalty is not attracted, some exceptions. Okay sir, because of operation of law. So there is a dispute regarding the rights to receive dividend. There is a disputes are there. Then at that point of situation, dividend has been lawfully adjusted against a dues. He is liable to pay some dues, sir. Because of his is liable to pay call amount like that, liable to pay some statutory dues towards a company. They can adjust. Children are given a specific directions as Paytm to pay. Company, however, those could not complete it because of some problem, but it should be communicated. Not possible, but you should communicate it. So, this question, sir. Company is not communicated, company is liable. Company is communicated, then company is not liable. Or any other reasons, any other reason. At that point of situation, this penalty is not attracted. Remaining all situation, the failure to follow penalty is attracted. This is all about section 123 declaration of dividend, transfer to separate bank account, IEPF account, what are the amounts credited, what are the amounts debited, what are the board of IEPO, dispute related to the payment of dividend and payment of declaration dispute resolved. Okay, so this is all about declaration and payment of dividend, section 123 to section 128. Section 123 to section 128. Clear? Section 123 to section 128. Okay, sir. Everyone is clear? 127. This is declaration and payment of dividend. Sir, our charts already shared in the group, sir. Okay, sir. Then you go through the charts, whatever the matter in the chart, that is sufficient. The entire ICA chapter, ICA related matter only. Okay, sir. Next, sir. Next. Right. This is next. Next is the accounts of the companies. Next one is accounts of the companies. Next is first of all, section 128 books of accounts. Listen, section 128 books of accounts. So listen, meaning of books of accounts. What is the meaning of books of accounts? Section 2 class 13 gives a meaning of books of accounts. All sums of money received and expended by a company. What are the total income and expenditure? All sales and purchase, all assets and liabilities of a company. So all together cost records and cost records of the company. So this all together it is called as, sorry, sir. All this together cost records. This all together is called as books of accounts under section 213. Okay, this is the meaning of books of accounts. The books of accounts includes all sums, money received and expended, all sales and purchase of goods and services, and also, sir, all cost records, all assets and liabilities is all together. It is called as books of accounts. So where you can maintain the books of accounts, where you can maintain some maintenance of books of accounts, the register office or any other place in India decided by the board, intimation to the ROC within 7 days. So you should maintain at register office. Any other place also you can maintain, but you can maintain at any other place. But you should. This is a discretion of the board of directors, but they give intimation to the ROC within 7 days of such change. So the books of accounts shall be maintained on accrual basis, not on cash basis. And the books of accounts can be maintained on the double entry system, not in single entry system. Some mode of maintenance of books of accounts. They more generally books of accounts are maintained in physical form, in electronic form also. They can be maintained. What was section 120 we already studied. Every books of accounts can be maintained. Every listed company, number of members are more than 1,000 members. Those people can maintain all the forms in electronic form. Like that, every company can maintain books of accounts in electronic form. So electronic form, then you should follow Rule 3 of companies accounts rules 2014. What it means, in case of electronic form, you can maintain that electronic form, the software can be accessible, that books of accounts can be accessible in India. The records must be complete records and unaltered records. Whatever they are mean that record, it should be mentioned that only. You cannot alter it. Our proper system of storage and display and retrieval, proper system of storage, retrieval, easy to retrieve, and backup shall be maintained. All resources servers are maintained at India only. And also, sir, whenever you can, who is the providing that software, who is the details of service provider, his name, his address, his IP address, internet protocol address must be informed to the ROC periodically. So you should maintain physical form, no problem, sir. You wanted to maintain electronic form, who will provide software? Who is such person? What name, address, what if track record, what IP address can be maintained, can be informed to the ROC. And you should maintain the backup, easily travel, easily understandable. It's easily accessible in India. All servers are maintained at India. It's nothing but you should follow these directions in case of electronic mode of preparation of books of accounts. So these books of accounts can be inspection. Books of accounts shall be opened for inspection at the register office of a company, such other place. Okay, sir, in business hours. In case of information outside India, books of accounts can be maintained outside India also, sir, no problem. So whenever you can maintain outside India, then at that point is that can be inspected by director. Director that can be inspected. So that can be inspected by a director. Whenever books of accounts can be maintained at outside India, foreign, then at that point of situation, books of accounts can be maintained by a director. Maintained by the director, sir. Who will maintain, sir? Director will maintain. Director is, sir, general, other than outside India, director can send his representative also. But in case of director situation, whenever outside India, foreign registers, they wanted to inspect only director. So answer. Information outside India also open for inspection. Any directorate's procedure as follows. You should follow. Sir, summary of such books of accounts sent to register office at quarterly basis. Director requested any further information, he can request directly, but not through representative. Okay, so the request of company should be processed within 15 days. Sorry, director can request it within 15 days of director request, then company can provide information to the director. So within India, then he can directly inspect, through his agent can inspect, but outside India, he only can inspect, he only can request it. There's nothing but inspection of books of accounts. The preservation of books of accounts are minimum 8 years they can, or the government said that you can preserve more than 8 years also they can preserve, but minimum 8 years you can maintain. So responsibility to prepare books of accounts. Who can prepare? Managing director, full-time director, CEO, management responsibility. So you are not, means professionals are not responsible. Management responsibility to prepare books of accounts. If not followed, there is a company penalty, 50 lakhs, 50,000 to 5 lakhs. Director, 50,000 to 5 lakhs, 1 year imprisonment period. This is all about section 128, books of accounts. Okay, section 129, there is nothing but financial statements. Section 129 is nothing but financial statements. What is financial statement? Section 2 class 40, financial statement includes profit and loss account, balance sheet, cash flow statement, statements changing in equity, and notes to account. These are all called as financial statements. While any company preparing the financial statement, they can follow, that means a Schedule 3, and they can follow accounting standards. Why? Because Schedule 3, they can formats, they cannot balance sheet like that is not white paper, is a formats are there. You should follow the accounting standards. You can follow the Schedule 3. Following these two is called as following of applicable financial reporting framework. For preparation, they can follow accounting standard. For presentation, they can follow Schedule 3. If not, means, sir, here it is not applicable to the banking company, insurance company, electricity company. Why? Because those are having separate acts, the separate formats, they can follow those. Other than this, remaining all, they can follow accounting standards and Schedule 3. So they cannot follow the accounting standards. Okay, sir. At that point of situation, why they cannot follow the accounting standard? What are the deviations? What are the reasons? So why you cannot follow the accounting standards? What are the reasons for that? What are the deviations? What are the, because of not following accounting, what are the financial effect on your financial statements, everything? Other sir, non-compliance, students, non-compliance of accounting standards. The company does not comply the accounting standards. They can disclose deviations, what you are not compliant. What are the reasons for not compliance? What are the financial effect on that? Compulsory should follow. Every company shall follow the applicable financial reporting framework. If not followed, they can mention why they cannot follow. And also, sir, company can prepare consolidated financial statements also. While you are preparing the consolidated financial statement, they can follow the accounting standards 21, 23, and 27. Preparation of finance, consolidated financial statement. So companies having more than one or more subsidiaries, then company can prepare consolidated finance statement. They can prepare that information also in the financial statements. The company is having more than a subsidiary, then shall prepare CFS, its subsidiary, as per section 23, 21, 27, and applicable Indian AS. Company must also include statement containing salient features of finance statement of subsidiaries. They clearly mention who are with the subsidiaries, what is the financial position of subsidiary, what are the information. That is nothing but statement containing silent features, important features of subsidiaries they can mention. A subsidiary includes associate and joint venture also according to the Companies Act, only not in the accounting standard purpose. Companies Act purpose, the your associated company and joint venture also includes financial statements, consolidated financial statement. So, but consolidated financial statement is not required in these situations, not required. What are those situations? The consolidated financial statements are not required. So, consolidated, not below cases. A company is wholly owned subsidiary, wholly owned subsidiary. So, companies, the holding is there. Okay, so 100% held by wholly owned subsidiary, So, at that point of situation, no need to prepare consolidated. Why? Because 100% held by this one, that is means where the consolidation is required. Entire only company only itself. There's nothing but only one subsidiary point of view. There is no consolidation. So unlisted companies, an unlisted company. Okay, sir. Those are not in the process of listing. Those are also no need to prepare consolidation. Or any intermediary company can prepare the consolidation. No need to prepare consolidation. How, sir? Suppose, sir, X is a company, sir. Y is a company. Z is a company. 2 layers permitted now. Okay, sir. Sir, here consolidated financial statement. Y company can prepare consolidated financial statement. So on behalf of Y, X can prepare Y information, Z information, no problem. Y no need to prepare again. So any intermediary holding company file a CFS with ROC as per Ind AS and no need to prepare. No need to prepare. This is nothing but compliances. Okay, so there is nothing but compliances. Clear, sir? If not follow this 129, there is a penalty. Same penalty of 128, sir. Minimum 50,000, maximum 5 lakhs, 1 year imprisonment per director. There is nothing but section 128 and section 129. Clear? 128 and 129. Next, sir. 130. So what is section 130, sir? Reopening of recasting of books of accounts. Sir, it's company, sir. Company can prepare a books of accounts. Okay, sir, they can maintain 8 years, no. First year they can file, second year they can file to ROC. Like that, every company can prepare books of accounts, they can file to ROC. So what happened this year, 2020, sir? 2019, company prepare a books of accounts. Those are already filed to the ROC. What happened? Central government, income tax department, SEBI, okay, so SEBI or any other authority felt that company filed financial statement on 2019, but there is a false information. Or there is a not mismanaged, fraudulent manner. Then these authorities are felt that then they can make an application to the tribunal. So 2019 financial statements filed by a company to ROC, no, this is a false information. The opinion that the earlier accounts are fraudulent manner or mismanaged, they can file to the tribunal. Tribunal agencies, they can give an order to a company. Company, you can reopen or recash your books of accounts. So these people cannot make an application to company directly. They make an application to tribunal. The tribunal can order. Tribunal can order to a company. Then tribunal orders. Then they can recast. Okay, sir. They can recast. Okay, sir. Sir, here tribunal order, sir. Here company, sir. Company itself they wanted to recast. That is nothing but voluntary revision of accounts. The board opinion that financial management, these are not mismanaged, this report does not comply with the provisions, then they make an application to the tribunal order, then they can recast. So one is central government make an application. Second one is you only make an application. Central government make an application. There is nothing but reopening or recasting by order of tribunal. Second situation, you make an application, reopening or recasting or opening by voluntary revision. Okay, sir. But here, sir, voluntary revision, sir, the reopening or recasting, whatever it may be, sir, reopening or recasting can be done by a company, sir, by previous 8 years low. Any year information you can reopen. But in case of voluntary revision, only 3 years, not more. Previous 3 years only permitted, more than that is not permitted. But here, sir, here 8 years, any year they can file, they can reopen. But here voluntary revision, only 3 years permitted, more than 3 years is not permitted. This is section 131, 130 and 131. Okay. So there's nothing but 130, 131. Next is sir, NFRA, National Financial Reporting Authority. That is nothing but section 132. What is section 132? So listen. Who will constitute? Why? What is important, sir? Olden days, sir, accounting standards can be prepared by ICAI. They can prepare. What happened? Sir, ICAI can prepare the accounting standard. Then who can verify? ICAI can verify the accounting standard. Who will follow? ICAI can follow the accounting standard by auditors only can preparation. So there is a genuinity is missing. So they are be the only authorities for preparation. They are be the only authorities for verification. So at that point of situation, law will decide at that. So who ICAI is having that power? No, no. Now central government is having a power. How central government is appointing NFRA, National Financial Reporting Authority. These people can prepare accounting standards. These people can verify the ICAI can follow the accounting standards. Not only ICAI, ICMI, ICSA, they can follow the accounting standards or not. They like that this is authority of the central government for accounting. Olden days ICAI, now the ICAI cannot serve the NFRA. So central government constitute an NFRA. Central government constitute NFRA. Head office at New Delhi. What is the duties of NFRA, sir? What is the duty, sir? Make a recommendation to central government, formation of accounting and auditing standards. Monitor the accounting standards or auditing standards of properly followed or not. And I'll oversee the quality services provided by the professional. Professionals can follow or not, how long they can follow, what are the procedures exactly they can follow or not, what is the deviations like that, or other as may be prescribed. These are the duties of NFRA. NFRA monitor the accounting standard, monitor the auditing standards. NFRA oversee the quality of service provided by the professionals. They can follow it or not, or other matters as may be prescribed. So this NFRA consists of chairperson and other members. So one chairperson and other members are part-time or full-time, not exceeding 15 members. Part-time or full-time, sir, but not exceeding 15 members. Like there is nothing but NFRA constitution of NFRA. More than 15 members is not permitted, sir. Only 15 members. NFRA. Okay, so these are powers. Powers of NFRA. NFRA is a quasi-judicial body. It's nothing but it's an authoritative body. Quasi means like a quasi-judicial. Why is my like a court? NFRA is having authority. What the court gives a powers, no, they can imprisonment, they can impose penalty like that. NFRA is also having the same powers. That is the reason. It's not a court like that. It's like a court, but it's not a complete court. That is the reason why it's called as quasi-judicial power. Students, a power to investigate, to take action against chartered accountants. Are there sumoto or any central government request? Sumoto is a power to investigate the chartered accountant, powers to take the action against chartered accountant. They can get sumoto as their own or central government. This chartered accountant does the fraud. Central government cannot for the central government. They can. Okay, sir. Into the matters of professionals and other misconduct. Where NFRA investigate, one NFRA investigation, no other investigation is going on. Any other civil or criminal, once NFRA came into picture, no one cannot take an action. NFRA will take an action. Powers like a civil court. What is a civil court? Discovery if the production of books of accounts other documents. Are Babu, you can produce the books of accounts. Books this office kara. Summoning and attendance of oath, or you should attend the. Okay, whenever we require a call, you can attend. You can give your explanation. Inspection of books of accounts and register office at any place. Issuing of commission or examination of witness of documents. Any situation. CBI is there, no. City is there, no. They can all call for information. They can call compulsory. You can go and you can give an answer. You can provide all information. You can go all evidences like that. And then for a call, they can go and give all information. You provide books of accounts. You produce books of accounts. Inspect the books of accounts. NFRA is having a right. Issuing either commissions, okay, the examination on their work like that. If not, there is a penalty. Individual minimum 1 lakh, maximum 5 times of fee received. Chartered accountant, sir, if they cannot follow, no, there is a penalty. There is a penalty. 1 lakh minimum, maximum 5 times of fees received. Okay, sir. Form is of article means audit form, sir. Then minimum 5 lakhs, maximum 10 times of form received. Okay, sir. They are debarring practicing certificate cancellation, sir. Minimum 6 months, maximum 10 years imprisonment. It's nothing but NFRA, National Financial Reporting Authority, Section 132. Okay, sir. Okay. Next, sir. Because listen, sir. In this definition, NFRA, so NFRA, who will follow the NFRA, who will constitute the NFRA guidelines like that? Specified companies, a class of companies, and these are all companies. Listed company, unlisted companies. Okay, sir. Class of companies, public interest, these are all companies has to follow. Those are the normal. Next is very important, sir. Corporate social responsibility. Corporate social responsibility, section 135. Corporate social responsibility. So listen. Sir, CSR is nothing but corporate social responsibility. Sir, which companies can constitute CSR committee? Sir, all companies cannot constitute CSR committee. Which companies, sir? If any company net worth 500 crores or more, turnover 1000 crores or more, net profit 5 crores or more, these companies, sir, these companies, when sir immediate preceding financial year, so these companies shall constitute a CSR committee. What are the composition? How many members are there? A public company, 3 directors, out of which 1 is independent director. So private company, minimum 2 directors are required. So foreign company, minimum 2 persons, 1 is authorized by central government, 1 is nominated by foreign person. Like that, these people must be in the CSR committee. Okay, sir. These people can frame what, sir? CSR policy. What they can frame, sir, to make a CSR responsibilities directly through a company. So they can frame the CSR policy. The CSR policy can be followed by through directly through a company, or they can through other CSR policy. Simple, sir. How, what is this, sir? Every company can contribute the amount, sir, maximum of 2%. Maximum of 2%. So this 2% they can expend it towards CSR activity. So they can directly expend it, or they can give indirectly expend. Indirectly means you can donate, means cooperative societies, trust. We are doing CSR activities. No, you can provide funds to those can expend it. Listen, you can directly expend it. You wanted to expend it directly, you can expend it directly. No, say you don't want to expend it directly, then you can contribute indirectly. You can through any other CSR related companies or corporate societies like that. You can should have track record of carrying similar business last 3 years. For those businesses, you can contribute. That is also CSR. So maximum how much amount, sir? 2% of the net profit. Okay, so 2% immediate preceding 3 years low. What are the average net profits? No, the 2% of net profit. This net profit does not include profits from the foreign branch, dividend from covered under section 135, dividend from company. So dividend from any other companies are not covered. Sir, your invested money, sir, you're receiving dividend from company. That money is not included in the profit, or foreign profits from the foreign branches also not included in profit. That remaining amount is nothing but net profit. Out of net profit, 2% can be the minimum amount. So generally company where they can expend it are local areas, not from the foreign area. So 2% can expend it, sir. Less than 2% permissible, not permissible. So okay, sir, more than 2% permissible, sir, but maximum 3% only. So as company, sir, company this year 3% expended. Next year 1% expanded. They say that, sir, last year 3 years season 1% can carry forward to this year. Not like that, sir. We expended more amount this current year, not carry forward to the other years. Failure to make CSR expenditure, they should so if the company failure to make CSR expenditure, they can disclose in the board report why the company failed to make the CSR expenditure. So CSR activities schedule 7 law, sir. There's some activities are there. Eradication of poverty, local education, gender equality, reduction of gender inequalities. Like that, the CSR activities are there. Those are mentioned in the schedule 7. Those activities should be expanded. Then only those are called as CSR activities. Okay, so there's nothing but section 135. Okay, so that is Charles, sir. Then any doubts in this today's session? Then ask me, sir. Any doubts, sir? Section 88 to 96 means 95. After that, section 123 to this 140 means 137. These are all are in chart oriented. There's already those charts are shared in our group. Please go through with charts. That is sufficient. You go through with chart and you solve the practical questions or any other question, that is sufficient. Okay, sir. MCQ's point of view also, sir, this chart is sufficient. Practical question answer way of answering, so this chart is sufficient. Go through with this chart, these charts are sufficient. Okay, sir. Then 136 board report, 134, 135, 136. After that, the charges. Then the first half an hour, 1 hour I will complete, sir. First 1 hour. After that, I will start with Indian Contract Act, special contracts. Okay, clear, sir. That is today's session. Any doubts? Today's session, tell me, sir. Sir, go through with the charts is very easy to understand. Okay, sir. Everyone is clear today's session. Any doubts? Then ask me, sir. Any doubts? Today's session is clear. Any doubts? Tell me, sir. Any doubts? Okay, sir. Thank you. Then we will meet tomorrow.